Visit thameswater.co.uk/binit. Together, we can care for the environment.
The Mona Lisa is only 30 inches tall, the world's hottest chili, 1 inch, and Napoleon, taller than a Great Dane, but only by 71 centimetres. Who says small can't make an impact? The Peugeot 108 Allure is now available for just $159 per month, with $159 initial rental. Our small but mighty car that doesn't have to cost you a small fortune. Peugeot Motor Company PLC, a credit broker not a lender, will introduce you to PSA Finance UK Limited. Personal finance lease, 48 months at 159, 18 plus, guarantee may be required. Terms, eligibility and return conditions apply. You will not own the car.
To Squawk Box. Happy Monday. A fresh trading session here in Europe is just getting underway here. Let me recap for you what we saw last week. U.S. stocks hitting fresh record highs as investors really shrugged off concerns around the fallout from the coronavirus, comforted in part by the expectation of further stimulus from China. And now that has already started to come through in the latest 24 hours. PBOC moving ahead with cuts to the medium-term loan rate to help support the economy and cushion the blow from the fallout from this coronavirus. So U.S. stocks ending higher last week. European stocks also logging gains. The Stoxx 600 ended about 1.45% higher last week. And now this morning, we are seeing extended gains come through for European stocks in the first moments of trade. The main benchmark up about 0.25%. Today, bear in mind, U.S. markets closed for President's Day. So all of the attention here in Europe. We've also got a number of corporate stories coming through this morning. So a lot to digest in addition to the macro and all those eyes that are continuing to watch coronavirus and the actions taken by the Chinese authorities. Let's get right into the sectors, see what makes up this 0.25% gain in the main benchmark. Chemicals down at the bottom here, the only sector in the red, and it's just down a touch, about 4 basis points. The majority of stocks in there in the green, though. BASF, the key underperformer this morning. We'll look at that stock more closely in a moment because there is an idiosyncratic driver behind that weakness. Industrials also under pressure this morning, but still in the green, up about 6 basis points. Let's move right along and see what's performing well this morning. Technology, household goods, healthcare, media, they're in the middle of the board here. And then moving along to the best performers this morning. Basic resources, travel and leisure, and autos. Very firm message coming through from investors this morning. Risk on. They are reacting well to the PBOC cuts, reacting well to the positive session in Asia, where the Shanghai Composite logged its biggest percentage daily gain since June 2019. So that positive sentiment filtering through and providing some support for those China-exposed cyclical sectors here in Europe. Let's take a look at the different markets in Europe, what the bourses are telling us. We are looking at gains for the FTSE 100 to the tune of about 0.3%. Over in Italy, that main benchmark also trading higher. We are still waiting, it looks like, for the German market to open up. But for the most part, we are seeing green come through across the board. So that positive session in China is coming through. And there we are, the DAX opening up about 0.2% higher. So right alongside the rest of the European markets. All right, let's get right into those corporate stories taking our focus this morning, starting with Bayer and BASF. You can see red, very firm red on the board here. Bayer shares opening down 2.7%, BASF down about 0.9%. Why? Well, Bayer says it will appeal a U.S. federal jury decision which ruled that its products with BASF have damaged crops. The jury awarded a Missouri peach farmer $265 million after he claimed the company's encouraged farmers to use dicamba weed killer irresponsibly. However, Bayer says the prosecution presented no competent evidence that its Monsanto herbicides were responsible for the crop losses. Now, why is this important? It's just one $265 million case. Well, it's not the only one. Both Bayer and BASF face more than 140 lawsuits in connection with the weed killer. And this has been obviously a very rocky road for Bayer, already facing pressure from the litigation against Monsanto weed killer Roundup. These cases separate to that, but just add to the woes facing the German company. It's been on a very strong run recently, but this morning adding a little bit of a blip to that performance. All right, in other corporate news, French rail company Alstom has confirmed reports that it is in discussions with Canada's Bombardier to acquire its train unit. The company, however, did not confirm a Wall Street Journal report that a preliminary agreement has been reached and could be announced today. Instead, they've said that negotiations are ongoing. The proposed deal would help Alstom compete more effectively with its main global competitor, China's CRRC Corp. Alstom's attempt to purchase rival Siemens train unit, you may remember this, had been blocked by European regulators last year in a very controversial decision. Alstom shares up about 0.6%. All right. Meanwhile, in the aerospace sector, the dispute over subsidies to aircraft makers has escalated between the U.S. and the European Union. This after the U.S. imposed tariffs on aircraft imported from the EU. The tariff will go up from 10 to 15% next month. Airbus said it deeply regretted the decision, saying it will hurt U.S. airlines and their customers. Airbus shares trading down about 0.7% this morning. And saffron is in focus this morning after the Trump administration is reportedly mulling a ban on certain jet engine exports to China. According to the Wall Street Journal, Washington may refuse a license for GE and France's Safran. They've got a JV to boost deliveries to China due to fears their production techniques could be imitated. Safran shares are reacting somewhat negatively, but investors taking this report in stride, down about 0.4%. So one to watch. Jeff?
Thanks very much indeed. Alan Custis is with us, head of UK equities for Lazard Asset Management. Alan, welcome. Good morning to you. Very open question. How do you feel about the opportunity around UK equities at the moment? We were discussing with Neil the French foreign minister's comments around Brexit negotiations. Yeah. It sounds like they want to play hardball. We've just lost a chancellor that people did seem to be warming to. And we've got someone who, at this point, could be a bit of an unknown quantity, and potentially the budget will be delayed. There seem to be lots of stories swirling around the UK market at the moment that make it difficult to know whether to own.
I think we thought sort of come the 13th of December that it would be not sunny uplands exactly, but we thought that a lot of the uncertainties would move out the way and we would move into 2020 about a transition year, and we could talk about equivalence and views around that. But as you said, we've now had a few of these factors that come in that effectively muddied the water, because I think when I sit here as a UK fund manager, actually UK equities look very, very cheap versus Europe. And you can argue they're as cheap as they've ever been versus Europe and against global equities. You know, good quality businesses. And so we were very, very positive on the market coming into this year. But thus far, for the reasons you just said, actually UK equities are lagging again European equities so far.
And let's just be very specific. When you say UK equities, you mean those listed in the UK on the FTSE 100 or the 250 or the 350?
Across the market.
Because we know there's this sort of big difference between where the revenue comes from for the FTSE 100 and where it comes from for the 250 or the 350.
It's not as much as you think, actually. At FTSE 100, at the market overall, you're talking about 70%. When you talk about the mid 250, you're still talking in excess of 50%. But what's interesting this year, again, you'd think that with the potential for, overseas earners, et cetera, that the FTSE 100 would do better. But as you sit here today, mid 250 again is doing better. And maybe that's the impact of coronavirus impacting on maybe some of the larger cap names that have more exposure to China than the mid 250.
Yeah, I'm a bit more constructive. I think, despite the fact it may not have worked out yet, I think that the signs are coming through that I think a lot of international investors are now going to revisit the UK. Political risk is off the table for the foreseeable future. We think sterling's 20% undervalued, so if you're an international investor, want to own something on an unhedged basis, you could see quite an interesting return on a 2 or 3 year view from the currency. And I think with some fiscal stimulus to see, I think we're all now waiting to see what, is the budget about tax cutting, along the, can I call it a Thatcher route, or is it about infrastructure spending? So we'll get two different types of resolution of that. And I think the UK's been under-owned. It's been far too hard to get through the Brexit headlines. And so I think it's a real contrarian opportunity to get stuck in.
Two questions, Alan, for you on the UK. One, when is private equity going to get more involved here? When is this revival in deal making actually going to take place? And where are they going to look? Is UK property and plays associated with that going to be, an area of focus for them, given we've heard on the show many times that there is, potential dislocation when it comes to UK property prices because of what's been baked in?
No, I absolutely agree. We've seen, I think before Christmas, we saw Hanstein being bought again by private equity. I think what's interesting in the UK property is if we'd had this conversation 3.5 years ago at the time of the referendum vote and said, actually, do you know what? UK property stocks in the main are going to be trading at all-time highs 3 years later. We probably would have had some level of disagreement. So when you look at the property stocks, you look at the very large ones like British Land, like Land Securities, they do trade at very material discounts still, and that's because of the retail element they have within their business. And so when I think about private equity, yes, I think there are some opportunities there, but it's probably going to be focused in on some of the larger names rather than some of the niche names, which are actually, frankly, have traded remarkably well through this period. But, pulling back a bit, London is a cheap market. 4% yield is cheaper than Frankfurt, it's cheaper than Paris. So I think all the bears that talk about, London, the impact of Brexit, I think they've got it wrong, actually. And I think that actually real estate in the UK actually is not a bad asset class to be thinking about this year.
Although Mr. Carney seems to have changed his mind about the resilience of the UK economy and is now talking about actually stronger growth trends possibly later in the year, does that not remove that expectation that seems to be built in by a number of managers that we're actually going to see at least one, possibly two rate cuts through the rest of this year? That did seem to be the put that was going to underpin the FTSE 100. Could that unwind if we begin to see, just strong enough numbers to deter the bank from moving?
Yes, very good point. I mean, I think that we've seen the soft data so far, and I think the soft data has been very good. But interestingly, I was having lunch with an MPC member last week, and his comments were that having moved in 2016 on the back of the soft data, which suggested that we were going to go into a significant recession, they are actually minded not to do anything at this stage. Let's see the hard data. Hard data actually doesn't start coming out until about March. And I think that will be the point at which, the MPC will reconsider. But also coronavirus, I think, is going to corrupt the data to a degree. So I wouldn't be surprised if they actually don't do anything. And I think, the narrative in January was, yes, we're going to cut rates. And I think the market was surprised they didn't. But I think as we carry on through, and if the hard data is supportive, I think there's a good chance that actually they don't cut rates.
Yeah, I would definitely also think they need to wait to see what happens in the budget. If we genuinely see a big expansion of the fiscal deficit, we're going to have a lot more gilt funding, which, whilst the ECB is printing, I think is relatively easily financing, because at least there's a positive yield in the UK relative to what's going on in Europe. But I think they'll want to see, where the spending priorities are, because if that does boost the economy, I think the cuts are off the table because the government is doing the heavy lifting rather than the markets.
There's been a lot of balloons floated around mansion taxes and cuts to pensions for the wealthy and so on and so forth. What do you think will be delivered at this point, Alan?
My understanding, and I know nothing as to regards what's actually going to happen clearly, but my understanding is some of those ideas have been taken off the table as it stands at the moment. My sense is, though, that it will be maybe a more fiscal budget than we would have expected under the previous Chancellor, and our understanding is they may be looking at ways around the sort of self-imposed limit in terms of infrastructure spend that was in the manifesto. So I would imagine that, and we saw it actually in the currency, when that announcement was announced, the new Chancellor, actually the currency moved up. And I think that's a function of exactly what Neil said, that actually it's going to be a more stimulative budget. The requirements, therefore, to cut rates are going to be less, and therefore sterling, I think, will continue to respond positively to it.
Yeah, I agree. I mean, I don't think the mansion tax feels on the cards. I think inevitably in the next 20 years the pension issue will continue to recur because it is such a big line item inside the government's spending. But I think it's all going to be about infrastructure and maybe social housing and more affordable housing. If they're going to keep this new blue wall that they have in the north of the UK, they've got to start moving things out of London. And I think that's the emphasis. I don't think you and I are going to pay less tax, unfortunately, which is my preferred policy.
Okay, we're going to wrap it up on that very quickly while we have a little cry over here, and let's send it to Juliana.
Let me provide a little bit of an interlude while you guys grab a little cry over there. Faurecia shares in focus this morning. They're up about 5.5%. The French auto parts maker has said market conditions will be tough in 2020 after the group reported a rise in full-year net profit and sales. The company is predicting another grueling year for the auto industry, with car production likely shrinking about 3% worldwide. So those are the share price reaction for Faurecia. And we had a chance to speak to Faurecia's CEO, Patrick Kohler, about the headwinds the auto industry is facing.
In 2019, we demonstrated our resilience. We achieved all our financial targets while we continue to invest, and even we have accelerated our transformation in cockpit of the future and in sustainable mobility. We lost 5.8% of the market in 2019, before 1.1, and this year, yes, I believe that we will be at minus 3%, with China most probably at minus 5%, which means that we will lose about 1 million to 1.2 million cars again in China.
Jupiter Fund Management has struck a deal to buy Marion Global Investors for an initial £370 million. The takeover is the latest sign of consolidation in the fund management industry as rising costs and decreasing fees weigh on companies. Jupiter says the acquisition will enable it to accelerate its growth strategy. Investors like what they see. Shares are up about 7.4%. Coming up on Squawk Box, Europe sees its first fatality from the coronavirus outbreak. While the death toll in China rises, we'll have more after the break.
I'm Peter Jones. Lifting business performance is critical in today's uncertain times. But how do you keep up with changing regulations and rising demands? How do you break free from manual processes to raise productivity? The answer is technology that elevates performance and comes with industry-leading support. Over 1 million UK businesses, including my investment group, trust Sage to manage their finances, operations and people.
Elevate your business today with our free performance review. Visit sage.com/perform.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
For gentlemen who value the quality of an exquisitely made shoe, Jones Bootmaker Master Shoemakers introduce the world-exclusive collection by Loke. Experience the comfort of the cushioned leather footbed and the sustainable, repairable Goodyear welted sole. The world-exclusive comfort collection by Jones Bootmaker and Loke, handmade in Britain. Available at Bow Lane, Broad Street, Fenchurch Street, German Street, Canary Wharf and stores nationwide. Or order online at jonesbootmaker.com.
Pancake Day is flipping fun. Pancake Day is Stella. This day will be a yummy one.
'Cause pancakes love Nutella.
Pancake Day is nearly here. Gather friends and family to enjoy some delicious pancakes on Tuesday the 25th of February. And don't forget, pancakes love Nutella.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Do you do the same thing every weekend?
You know, meet up with the same friends for brunch, browse around the same shops, eat the same Saturday night takeaway. Mine's a lamb balti with mushroom pilau rice. Snuggle up next to the same person and watch the same brain-numbing reality TV. Then maybe it's time to switch it up. Starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
Chinese authorities have reported almost 2,000 new cases of coronavirus and 100 new deaths. It takes the total death toll now to nearly 1,800. The rise in new cases reverses 2 days of relative declines over the weekend. The 380 American nationals quarantined on the Diamond Princess cruise ship off the coast of Japan have now disembarked after 2 weeks stuck on the vessel. They were put on charter flights returning to the US. Around 40 Americans tested positive for the virus. They will remain in Japan. Europe has seen its first fatality. An 80-year-old Chinese tourist died in France. Egypt has confirmed a case of coronavirus that is the first in Africa. A speech by Chinese President Xi Jinping suggests the top leadership knew about the dangers of COVID-19 at least 2 weeks before it was made public. In the speech, which was published by state media on Saturday, Xi said he began giving orders on how to combat the virus on January the 7th. However, officials only revealed the virus could spread between humans in late January. Several authorities in Hubei, the epicenter of the virus, have been criticized, and officials have been dismissed over their handling of the outbreak.
China's central bank, though, has cut its medium-term lending rate as it scrambles to ease the economic fallout from the coronavirus. The move will lower the interest rate on 200 billion yuan worth of loans to financial institutions. Analysts expect the PBOC to announce further easing measures later this week. And as you can see there, the basic resources sector here in Europe reacting well. Very China-sensitive, very cyclical sector. Antofagasta leading the charge, up about 1.6%. Now, Chinese markets have closed sharply higher just before, of course, the European market opened. Sherry Kang now joins us with the details around the Asian trading session. Sherry, it looks as though Chinese mainland investors have taken quite well to the PBOC's announcement. Is that what's behind the rally that came together in the China trading session?
That's exactly what's driving these greater China markets higher. And of course, that supportive stance coming from the PBOC was basically defined by the MLF cut this morning. And there are whispers about what might happen on Thursday this week. Further, a rate cut down the road. We're talking about the example of loan prime rate this Thursday. As you can see, green pretty much across the board. And in terms of the sectorial landscape, all sectors are pretty much in the money for a lot of these indices. So really broad-based gains that are quite meaningful, because this actually puts a Shanghai Composite, for example, in a positive, territory for the month as well. We're talking about sectors like consumer cyclicals, more specifically autos, technology, really leading the gains. And get this actually puts the composite in Shanghai in the pre-coronavirus outbreak levels as well. It's the same story in Shenzhen as well. This composite is actually up more than 3% at the close. All sectors making money. We're talking about technology, industrials, gaining in a meaningful way. And for the month-to-date performance, the Shenzhen Composite is actually plus 4.5%. And I think it's also interesting when it comes to Chinex, because this is the startup board in Shenzhen. And this is reacting to what we heard on Friday, Chinese securities regulators talking about how they're going to relax the regulation on profitability requirement for these smaller companies. And that certainly attracted a lot of liquidity to this index. But when it comes to the Hang Seng Index here in Hong Kong. Sure, all sectors did, rise, did gain for the day. But of course, one of the laggards, I should say, because the Hang Seng Index is up, but to just about 0.6%. So for the day, reacting very much to the supportive stance coming from the PBOC and not really asking the long-term questions about what's happening with China's delicate balancing act, and are they going to risk, of course, that possibility of eroding perhaps all the de-risking efforts that it's been making for years now. Guys?
Sherry, thank you so much for that detail. And really interesting to hear what the whispers are in China when it comes to further stimulus, potentially later this week out of the PBOC. All right, let's get back to our conversation around the desk. Alan Kustis, head of UK Equities, Lazard Asset Management, is with us, and our guest host, of course, Neil Duane from Allianz Global Investors. Alan, before the break, we were talking UK property as a sector that traded at a heavy discount as a result of the fallout from Brexit. UK banks have also been under a great deal of pressure, and on Friday we heard from RBS what investors seem to have taken as a pretty disappointing update, in particular on the dividend and the outlook, and they are now undergoing this major rebranding. What do you think of the UK banks here? Is this a space that investors should be looking?
It's a very good question. Interesting. Last week I was looking back to remind myself how big the weighting of UK banks were in the UK index. And I look back at 2006. UK banks are 18% of the benchmark in 2006. So we see here today they're 9%. So if and obviously some of the names have long since disappeared. So if you stand back and say, have banks been a good investment over the last 14 years? The argument is no, they haven't been good investments. And so when we sort of think about the results from last week, and obviously we had Barclays and Royal Bank of Scotland, I think one of the themes that we struggle with as investors in UK banks is returns. And I think we've touched on earlier in the commentary. Return on equities, which is one of the key measures that we all think about, and the multiple that we're prepared to pay for that. There is pressure on that. If we think that interest rates are going to be maybe 200 basis points lower than they will go, at the previous cycles, for banks that's bad news. At the moment there is no spread, bond yields are very, very low. So that's why I think we saw in Royal Bank of Scotland them pulling back guidance in terms of return on equity. I think any bank that sits here today and thinks that it can produce a double-digit return on equity is certainly what we're playing with at the moment. It's a bit of a pipe dream, frankly, at the moment. That may be a little bit strong, but I think it's a very difficult environment. At the same time, you've got counter-cyclical buffer costs going up from the Bank of England. You've got overdraft costs. They talked about overdraft headwind costs of £300 million going forwards for Royal Bank of Scotland. So as an investor, they're a difficult market to invest in with a high degree of confidence at the moment. But, if we do get interest rate rises later in the year, then it clearly changes it more positively for the banks.
So a lot really comes down to the Bank of England. Neil, weigh in.
Yeah, I sort of split the UK banks into two. You've got the two big Asian banks, where clearly we now have interesting risk, particularly I think now around liquidity, credit provision, potentially rising bad debts out of what, were very, very strong businesses for Standard Chartered and HSBC. Whereas I think in the UK, I just constantly, Jeff and I were talking about it off camera, constantly amazed at the amount of money that they've lost in PPI, and is there another one out there that would just stop the returns to shareholders coming through? The mismanagement, generationally just seems to continue. So I don't think they're really telling you want to own them yet. Unlike the US banks, where, as you point out, we've seen the cash generation deliver the dividends that shareholders have been looking for. So I think the UK is more adequately capitalised than Europe, where I still think there are an awful lot of bust banks, but that capital is just not coming home to shareholders yet. And I think that's the frustration.
Tricky. Okay, well, thank you very much for weighing in. Alan Kustis, head of UK Equities, Lazard Asset Management, and of course our guest host, Neil. All right, well, coming up on Squawk Box, regulate us. That's the message from Facebook boss Mark Zuckerberg. Find out why he thinks big tech needs bigger oversight. We'll debate that after the break.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Oh. Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
It was a Sunday morning when I jumped on the tube.
And decided to pop down to Greenwich via
a large indoor jungle.
And when I got there, I was captivated by a sparkling
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of Off-Peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters.
£1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
Ah, good book. Refreshing drink. 6 degrees outside. 35 in here. This really is the life.
Could the gentleman in aisle 2 please remove himself from the hot tub?
Oh, so much for try before you buy.
Well, at Ford, you can. Test drive and purchase any new Ford car or commercial vehicle this February, and we'll give you an additional £500 off the recommended retail price. Search Ford Test Drive Promotion. Retail and small business customers only. Contract and register by 29th of February 2020 at participating Ford dealers. Excludes Ford scrappage.
Good morning, this is your Southern service to London Victoria. Join in our onboard quiz. Here's our next clue. What sea sounds like a handheld party food but keeps you dry and protected from the rain? Not canapes, canopies.
At Southern Railway, we're investing over £7 million into making improvements for you, like canopies, cycle parking and new platform lighting across more of our stations. Find out more and book your tickets at southernrailway.com. Southern Railway, we're with you.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
And a block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The Stock 600 hits a fresh record high. The Shanghai Composite posts its best day since June after the PBOC cuts its medium-term lending rate to ease economic pressure from coronavirus. Bayer hits back after losing a key crop damage lawsuit alongside BASF, criticizing the evidence and saying it will swiftly appeal, but shares trade lower as 140 similar cases are pending. Full steam ahead for Alstom shares. They're trading higher. The French train maker has confirmed it is in talks to buy Bombardier Transportation. And Airbus shares hit a one-month low. The aerospace giant says it, quote, deeply regrets a US decision to hike tariffs on European-made aircraft.
Well, the trading session has now been underway for about a half an hour, and markets are off to a strong start. The Stock 600 overall is up about 0.4%, adding to last week's gains when the main benchmark gained about 1.45%. Now, these gains have come on the back of a very strong session in China. The mainland Chinese markets and the greater Chinese markets reacting very positively to news from the PBOC. They've gone ahead and cut the medium-term loan rates to help support the economy. So that stimulus that the investment community was hoping to get from China now starting to come through. And there are whispers that we could see further action as soon as this week from the PBOC. We could see them cut the loan prime rate later on in the week. So a lot of positive momentum around that stimulus story from China, and it's providing some support for European markets today. U.S. markets, of course, closed for President's Day today. All right, well, let's get into the sectors and see what is behind this rally in the overall benchmark. Well, it's green nearly across the board in terms of the sectors this morning. Real estate, the only one trading in the red, down about 20 basis points. But perhaps more interestingly is the sectors that are outperforming this morning. Very clear tilt towards cyclicals. We've got autos up 2.2%, basic resources up more than 1%, banks, oil and gas, financial services, and travel and leisure. So those China exposed, those very, very cyclical sectors are getting a nice bid this morning. But we do have some single single stock stories that are contributing to the positive momentum as well. So on that note, let's take a look. Faurecia is the main one I want to highlight. Shares, they're up about 5.7%. They are also bringing up the broader auto space. Valeo, Continental are also trading well after Faurecia delivered profit growth in 2019. They did say the auto market will remain challenging in 2020, but clearly this was better than the market had been expecting, and it's providing some support for broader European autos. The other stock I want to highlight on the downside, Bayer, just underperforming this morning, down about 2.4%. BASF also under pressure. Those two names are being sold this morning after a U.S. court guilty around an herbicide case, around an herbicide dicamba that was used, and we are very closely watching that story as it develops. They've got about 140 similar cases that they're facing off in the U.S. So those two names are ones to watch this morning as well. But overall, European markets following China markets higher this morning. Jeff?
Thanks very much indeed for that. The West is winning. That was the message U.S. Secretary of State Mike Pompeo had for delegates at the Munich Security Conference as he sought to reassure European allies over President Trump's America First policy. Pompeo was responding to criticism from Germany's president, who warned Washington had rejected the concept of international cooperation. The U.S. Secretary of State also said the so-called demise of NATO was grossly exaggerated. Pompeo and U.S. Secretary of Defense Mark Esper also hit out at China, with Esper accusing Beijing of carrying out a, quote, nefarious strategy through Huawei. The Chinese Foreign Minister Wang Yi rejected the accusations, describing the allegations as smears. Hadley joins us from Dubai, where she's taken refuge, no doubt, after what was a very grumpy Munich Security Conference, Hadley.
Absolutely. And it was so interesting, Jeff, to think about those conflicting narratives. On the one hand, you had, as you mentioned, the German president, as well as other European leaders, and even, I might add, members of the U.S. Congress. Nancy Pelosi, the Speaker of the House, was on site at Munich as well, essentially talking about the fact that when it comes to America's foreign policy, when it comes to the America First policy, a lot of folks, traditional allies, NATO allies, in fact, feeling pretty left out. At the same point, the U.S. delegation, U.S. Secretary of State Mike Pompeo, U.S. Defense Secretary Mark Esper, as well as the Energy Secretary, all of them coming with seemingly one message, which is that the biggest worry to the West, and certainly for the United States, is China. Now, when it comes to Huawei technology, I had the chance to catch up, as you know, with the Secretary of Defense, Mark Esper, an exclusive interview, and I asked him about that directly. He told me that the United States is already spending hundreds of millions of dollars to create a test bed for Western companies, U.S. companies, to try and create a viable alternative to 5G. Listen in to what he had to say.
We need to move as quickly as we can, because otherwise China's domination of this market will continue to grow. It's a long sought-out strategy where they are undermining markets by going in with below market value prices. They're gobbling up market share, and we need to get there quickly so we can keep them out of that space and then preserve our close ties with all of our partners and allies.
When you look at this from the perspective of strategy, the coronavirus hitting China very hard. At the same time, they've even described their own approach to this as a wartime crackdown in terms of getting control of what's happening with regards to the virus. Are you worried that China's model, shall we say, of capitalism, this government-sponsored capitalism, is endangered by what we've seen over the last couple of weeks with regards to corona? Because it seems as if the Chinese government took a long time to recognize the problem.
Well, my concern is with the model writ large. It's not just their economic model, but it's the political model as well. So if you read deeply into the papers, what you find is that one of the challenges that constantly face is a lack of transparency. And why did this virus spread so quickly? I think they interviewed the mayor of Wuhan, who said, look, I was afraid to say anything because they would come down on me, maybe put me in jail.
So almost a Maoist playbook with regards to what's happening.
Well, and so what happens is, in this case, suppressing the truth, putting a heavy hand on local authorities, actually enabled the virus to spread. And if we had a different type of system where it was much more open, much more transparent, willing to admit shortcomings, willing to accept help from the outside, we could have tamped down this virus arguably much more quickly.
Talking there about Huawei, but also talking about, frankly, something that a lot of folks seem to have their minds on over the last few days in Munich, specifically to the point about the Chinese government, their response to this crisis. You know, the IMF managing director telling me several times in our interview exclusively on Friday last week that, you know, it's too early to say. They want to be very cautious about their moves and their comments on what's happening in China today with regards not just to growth, but frankly, whether or not the government has an actual handle on the situation so that they don't make it worse. At the same time, guys, no doubt, I mean, China definitely on the agenda, forefront of the agenda when it comes to defense policy for the United States, but certainly more globally, something that everybody is deeply concerned about and frankly very worried about their own comments making the situation potentially worse. Guys.
Thanks very much indeed, Hadley, for that. We've just got a line coming through from Cathay Pacific. They are delivering an update on earnings and load factors. The group tells us they think that first half financial results will be significantly lower as a result of coronavirus. First half will be financially challenging. The January cargo load factor, which gives us some early indication, I think, of coronavirus-related effects, down 1.4%. 60.2% was the load factor on cargo. The passenger load factor, 84.7%, down 1.3%. The company then goes on just to give us a bit more flesh on the bones around what the Chinese New Year resumption delay of manufacturing across mainland China will mean for some of that load factor. But by and large, as you'll appreciate, it's not a positive picture that we're getting from Cathay Pacific this morning. And of course, Cathay has been quite aggressive in its own measures, giving a lot of its staff time out because of the fear of coronavirus.
And it's interesting to see that the travel and leisure sector here in Europe is performing well this morning on the back of that stimulus from the PBOC, despite, of course, the impact that we know is going to be felt by the European airline space as well. All right, well, let's leave that story there and push on to talk tech. Facebook CEO Mark Zuckerberg has called for new rules on big tech to ensure they, quote, serve society. The social media giant is set to release a white paper later today, which will lay out questions that regulation might address. Zuckerberg is also in Brussels, where he will meet with the EU's Internal Market Commissioner and Competition Commissioner, Margrethe Vestager. That's going to happen later today. And to run us through all things Brussels, Sylvia is now joining us around the desk. Sylvia, lay out for us what we know so far in terms of Vestager's approach to Facebook and regulation of the tech giant. And then we're going to hear from her later this week in terms of her broader strategy. So give us the lowdown.
So when it comes to Facebook, we know that the European Commission is investigating how the company uses data from all of its users. But also this meeting with Zuckerberg is happening at a very important time when it comes to new regulation. On Wednesday, for instance, the European Commission is set to unveil new rules on AI. And we know that Facebook and other tech giants have a lot of investments in this area. So the rules that will be unveiled on Wednesday could impact some of the business plans that these companies have. But in the broader context of regulation, we've heard different times from Mark Zuckerberg asking for further clarity from regulators, and he repeated those calls over the weekend at the Munich Security Conference. Let's take a listen.
We do see different regulatory models coming out of places like China that are spreading to other places as well. This is one of the reasons why I think the regulation is so important, because also regulatory models are spreading that I think encode more authoritarian values in more places around the world. I'm very worried about that. I think that we need to make sure that the internet can continue to be a place where everyone can share their views openly, and where the legal framework around this is one that encodes democratic values and open values. And I do think that it is, as part of that, we got to move forward on regulation. Hopefully we move forward quickly before a more authoritarian model gets adopted in a lot of places first.
So Zuckerberg there, he will be meeting other European officials later today. 3 of the EU's top officials, including Margrethe Vestager, the head of competition policy in the EU, who we'll be speaking with tomorrow morning.
All right, Sylvia, thank you so much for keeping us up to date. Look forward to that. All right, well, let's move forward. We are going to take a break, but when we come back, we are spicing things up on Squawk Box. Victoria Beckham opens up on the impact of the coronavirus, the future of the fashion industry, and her new line. Don't miss our exclusive interview just after this break.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, and try not to mumble.
Playing, let's get ready to rumble.
Oh.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Suffering from house embarrassment? At Wix, there's buy one, get one half price on all interior paint, including Dulux. Ends today. Terms apply.
The Grand DFS sale featuring Wallace.
Hello?
And Gromit.
Well, say hello, lad.
Every sofa is made to order.
Buy a speedy Sofa-matic machine.
By hand.
Oh, suit yourself.
So you can have your sofa exactly how you want it.
Made of cheese?
Not that exactly.
Oh, probably a good thing, eh, Gromit? It'd be gone in a jiffy.
The Grand DFS sale is now on.
How about a cushion made of cheese? Or a footstool?
Are you sitting comfortably? Is your roof cascading light in the space around you? Loving that feeling as you glide over a bumpy road? If you are, you're most certainly experiencing the advanced comfort of a Citroën SUV. If you're not, take one for a comfort drive. A test drive, but way more comfortable. Citroën C3 Aircross and C5 Aircross SUV range. Now with £500 off list price and free 0% APR finance. Ooh la la! Citroën. Citroën UK Limited, acting as a credit broker, not a lender. Conditional sale. Terms, eligibility criteria and conditions apply. Guarantee may be required. PSA Finance UK Limited, participating dealer stock vehicles ordered between the 3rd and the 29th of February and registered by 31st of March.
Good morning, this is your Southern service to London, Victoria. Join in our onboard quiz. Here's our next clue. What C sounds like a handheld party food but keeps you dry and protected from the rain? Not canapes, canopies.
At Southern Railway, we're investing over £7 million into making improvements for you, like canopies, cycle parking, and new platform lighting across more of our stations. Find out more and book your tickets at southernrailway.com. Southern Railway, we're with you.
Welcome back to Squawk Box, where we promised we would be spicing things up today. London Fashion Week saw subdued attendance as the industry looks to combat a number of challenges, including climate change concerns and fears over the coronavirus outbreak. Very pleased to say that Tanya Breyer joins us now around the desk with more. Good morning, Tanya.
Good morning. I like the spicing up. I thought you were talking about Jeff for a minute, Juliana. He spices every morning up, doesn't he?
Look, Steve hasn't been here for a week, and it's been calm, peaceful. Okay.
He's not,
and now you come on and start
very spicily dressed today, though. It's a very conservative.
Oh, come on.
For him it is.
Come off it. You're going to start too, are you? All right. You're going to get some.
So London Fashion Week, Juliana, yes, there are a number of challenges this time. And of course, coronavirus, also Extinction Rebellion were also demonstrating. And of course, we post-Brexit too, because London Fashion Week last year didn't have that clarity that they have obviously now. So I caught up with the CEO of the British Fashion Council, Caroline Rush, to talk about some of those challenges.
So the fashion industry has been talking to government since the referendum, talking about the impact this potentially could have on our industry. So the conversations have been had, is that we'll now keep those ongoing. There's many consultations taking place as the negotiations are, as we look to transition out of the EU. Is the biggest concern for industry is very much around talent, making sure that everybody has access and visas that they need, particularly at a skills level which aren't necessarily the highest earning positions. And so that's sort of one of the main points that we're talking to industry about. The main message is the fashion industry is a significant one for the British economy. 32 billion, employs 890,000 people. So on a par with telecoms, car manufacturing, and needs the same airspace to make sure that we get the right deals as we exit the EU. So in terms of the coronavirus, we have been taking every measure we can to make sure that the health and safety of the visitors of Fashion Week are looked after. But we have a huge amount of empathy for our Chinese partners, for the media and retailers that have been unable to travel, and of course for the whole network of this interconnected ecosystem of a global industry that is very much impacted by things like factories having to close, reduced store hours or store closures.
So despite all of the challenges, of course, a lot of the brands, a lot of the designers were showing. And I caught up with Victoria Beckham exclusively after her show. She showed her collection for autumn-winter 2020. She's also launched a beauty brand as well. And when I sat down with her, I asked her just what kind of preparation goes into a show like this.
I mean, you literally don't sleep for about 5 nights on the lead up to the show. So there's a lot of nervous energy in there. But it's fun, you know, seeing the girls put the clothes on, seeing the clothes come to life is really, really exciting. And it's about challenging myself every season. That's really important as well. And we spend so much time agonizing over every single detail. Is that the right hem length? Is that the right shirt? Is that the right girl, you know?
London Fashion Week has had its challenges this time. The coronavirus has stopped people coming from China. How has that affected you? Were you worried by it?
I think everybody's worried by it. And, you know, I think it has affected business. You know, that's obviously a big market for us. But I think that it's the same. It's the same for everybody. I think that, you know, it's horrific.
And also sustainability has been another big theme, Victoria, and they've got Extinction Rebellion protesting. What's your message to them?
You know, I think that we all have a responsibility, and the fashion industry, you know, we're still educating ourselves. We're trying to do as much as we can. We recognise that we do have a responsibility. You know, with beauty, for example, you know, we're very proud of the fact that sustainability is key, and also, you know, clean formulas, you know, is also key. So being kind to yourself and kind to the environment. You know, with our beauty, 100% of our packaging is using post-consumer waste. So I think it's definitely something really important that we all take very, very seriously.
Talking about your beauty brand, you've paired up with Augustinus Bader.
It's always been a dream of mine to go into skincare, but there was only one person that I wanted to do that with. I want to ultimately create what I believe is the best, what I want to use myself. And I said there's only one person that I can do that with, and that is the professor himself. The serum that we launched last week has been an outstanding success.
Yeah, I was going to ask you, is it something you'd like to expand on?
Absolutely. I mean, we have a big plan. Lots more to come from beauty and makeup.
But Tanya, it's really fascinating to hear Victoria Beckham speaking so much about sustainability.
Yes, of course.
And given she's such an influential character in the fashion world.
Yeah, she's got 28 million on her social media. She's a huge brand for us globally, is what you were saying. And she really represents the industry in so many different ways. And now that she's building up her beauty brand, I think sustainability is absolutely key. And that's been one of the key messages throughout London Fashion Week as well. And of course, we've had Extinction Rebellion protesting and saying, look, you know, we want to cancel London Fashion Week in September. And all the designers and Caroline Rush from the British Fashion Council, they're all saying, look, guys, let's have a conversation together. Let's work through this together so we can see how we can all get to the same end goal.
Sorry to be cynical, but the fashion industry talking about this, it's a joke, isn't it? I mean, they rely on selling goods and presenting a new version of a jumper, you know, every season to persuade the retail customer to part with their cash.
Look, Jeff, it seems like how could one go with the other? I think the huge thing for sustainability is fast fashion. And I think that's what a lot of the protesters, a lot of the sustainability voices are coming out to say, look, first let's deal with fast fashion, the HMMs more so than the actual designers themselves. The actual designers themselves, of course, each collection are creating new designs, but what they're saying is how they do it and the materials and fabrics, and if they can do it in a sustainable way, that can help.
Obviously, this ESG theme is important for the markets, Neil, and I guess the biggest challenge is just figuring out what you buy or what you want to own to take advantage of these trends this year.
Yes, although also I would argue it's how we engage with managements and companies to maybe reflect some of these underlying pressures. So whether it's, the more vegan, planet conscious type of food, or whether it's sustainable fashion, or even the flight shaming you and I were talking about just before, where people are feeling if I fly less, I won't be damaging or driving a Tesla rather than driving a diesel car. I think we all have to work out how much we think people are going to change. And certainly what we've been saying to our clients is that the consumption move away from the baby boomer to the millennial is now real. And companies now have to get with that program, not only in terms of how they shop. My comments about, online, some experiences are way better than others. But I think we then, as investors, have to think how far we're going, are we no longer going to fly the discount airlines in Europe because of climate, and therefore forego summer holidays, skiing holidays,
it's
whatever.
But behaviour, yes. Neil, isn't it? It's complete behavioural change.
Whether we are going to change. Yeah. I mean, I would hope maybe if we're going to consume less, we consume better.
Yes.
But I would therefore go back to, you buy a nice pair of leather shoes and then all you ever need to do is repair the soles, whereas at the moment, ladies' fashion suggests you need about 17 different pairs of shoes a year just to stay fast.
I think that's also the message too, in the sense, at Victoria's show, what I noticed that she brought back platforms, which was sort of, I think, in a theme to the sort of Spice Girl image, and there were platforms being shown there. So, buy one pair that could go with everything. And I think the message from designers, of course, that is, they're coming out with all the different, you can see the fabrics, the prints, the colours, and the platforms you can see there. But it's not necessarily, there's Victoria, buying everything. It's how you consume and whether you will buy that one outfit that will last you and invest in that.
I think it's undeniable. There's been this shift in behavior of people wanting to buy more sustainable products, but it's still such early days for so many of these new materials, thinking about plant-based food, for example. Yeah. And when you're thinking about investing, how do you know that this is not only a trend that's here to stay, but that the new materials and products, but that they themselves are actually a better alternative?
You have to do that research into them, don't you?
You do, but also I think it's quite clear, even with what happened with Kraft last week, that we can see where the losers are. It's the people who did the bulk things in tins that baby boomers used to go to Costco and Walmart and buy huge numbers of it. People are now looking for more tailored personal service that is potentially more sustainable, and that is creating not only opportunity but enormous disruption.
The other thing to point out is that the fashion industry is actually 32 billion to the UK GDP, so I think that's also important, and employs over 700,000 people.
And back to your theme that you think the UK is going to be a fine place to park money this year.
Yes, I do. I mean, I think, as you heard from Alan, I think that the market's cheap. I think it's under-owned. Sterling is cheap. And I think we will definitely economically do fine, courtesy of not only sustained low interest rates, but maybe greater confidence with politics and policy. So definitely happy to be there.
Okay, we wrap it up. I think that's the end of the programme, pretty much, isn't it? Tanya, thanks so much for coming in. Neil, good to see you. That Squawk Box, street signs coming up after.
Good morning, this is your Southern service to London Victoria. Join in our onboard quiz. Here's our next clue. What C sounds like a handheld party food but keeps you dry and protected from the rain? Not canapes, canopies.
At Southern Railway, we're investing over £7 million into making improvements for you, like canopies, cycle parking and new platform lighting across more of our stations. Find out more and book your tickets at southernrailway.com. Southern Railway, we're with you.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Suffering from house embarrassment? At Wix, there's buy one, get one half price on all interior paint, including Dulux. Ends today. Terms apply.
Give ordinary some oomph. Give it some gusto. Give it all hands on deck with over 40 recipes every week for you and the kids to choose from. Give it all the ingredients you need delivered to your door. Give it a delicious home-cooked meal from just £2.98 per person. Go on. Give it some gusto. Visit gusto.co.uk today and get 50% off your first box. Subscription auto-renews, cancel anytime.
Send message to Elise. Salut, sorry, I'm running late. Just in the car now. Send. I forgot the cake. Send. Actually, great news. SatNav has found a new route. See you in 10.
Message on the move in the Citroen C1 and stay connected. Experience Citroen C1, available from £149 per month with initial rental of £149. Citroen. Please drive responsibly. Citroen UK Limited is a credit broker, not a lender. Personal lease. You will not own the vehicle. Offer on fill VTI 725 speed manual, 6,000 miles per annum. Guarantee may be required. Terms, eligibility criteria and return conditions apply. PSA Finance UK Limited.
No money. Correct. What did it take? Just some effort. And that'll continue. I don't believe you. We're going to prove to you that you're wrong.
The Prophet, all new tomorrow. The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Major League Baseball is back. Are you ready to unlock the 2020 season with TuneIn Premium?
And this one is gone! It hits the foul pole!
Be there from day one with every single game of spring training, rivalry games, split squads, Cactus League, Grapefruit League. TuneIn Premium has it all. Then, when the pitch count starts for real, experience live and on-demand access to every game, everywhere you go, from opening day to the World Series. Don't miss out on the action. Search Premium to upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. Here with Skip
Follow at TuneIn on Facebook and Instagram to get the most out of TuneIn.
This week on the New Yorker Radio Hour, another election story, but this one with a twist.
We need changing. Gotta check me your vote. I got LGBT rights and I'm a legalized dope. America's going broke and I ain't gonna sit back. While Creepy Joe looks at little girls like they saw him snap.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Did you know your favorite radio stations are in your pocket?
Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio
Anywhere you want.
To see all the stations broadcasting in your area.
Find the local radio section on the home screen.
Keep it local with TuneIn.
Peach farmer $265 million after he claimed the companies encouraged farmers to use dicamba weed killer irresponsibly. However, Bayer says it will appeal the decision, adding the prosecution presented no competent evidence that its Monsanto herbicides were responsible for the crop losses. Both Bayer and BASF face more than 140 lawsuits in connection with the weed killer. And shares in Airbus have hit a 2-month low as the dispute over subsidies to aircraft makers escalates between the U.S. and the European Union. This after the U.S. imposed tariffs on aircraft imported from the EU. The tariff will go up from 10 to 15% next month. Airbus said it deeply regretted the decision, saying it will hurt U.S. airlines and their customers. And switching to the auto sector, Forex is trading at the top of the Stock 600 after the French auto parts maker reported a rise in full-year net profit and sales. However, the group warns that market conditions will be tough in 2020 and is predicting another grueling year for the auto industry, with car production likely shrinking about 3% worldwide. Forex CEO Patrick Koller spoke to us about the headwinds the auto industry is facing.
In 2019, we demonstrated our resilience. We achieved all our financial targets while we continue to invest, and even we have accelerated our transformation in cockpit of the future and in sustainable mobility. We lost 5.8% of the market in 2019. Before 1.1, and this year, yes, I believe that we will be at minus 3%, with China most probably at minus 5%, which means that we will lose about 1 million to 1.2 million cars again in China.
And switching to industrials, Alstom is trading higher after the French rail company confirmed reports it is in discussions with Bombardier to acquire its train unit. The company, however, did not confirm a Wall Street Journal report that a preliminary agreement has been reached and could be announced today, instead saying that negotiations are ongoing. The proposed deal would help Alstom compete more effectively with its main global competitor, China's CRRC Corp. Alstom's attempt to purchase rival Siemens train unit had been blocked by European regulators last year. And switching to the UK, shares in Jupiter are set for their best day since August 2013 after the fund manager struck a deal to buy Marion Global Investors for an initial £370 million. The takeover is the latest sign of consolidation in the fund management industry as rising costs and decreasing fees weigh on companies. Jupiter says the acquisition will enable it to accelerate its growth strategy. So that stock is up almost 9% today in trading. And the EU and the UK will, quote, rip each other apart in trade talks following Britain's departure from the bloc. That is according to French Foreign Minister Jean-Yves Le Drian, who added that this is part of negotiations. That is a quote. Le Drian added that London's aim of striking a trade deal by the end of the year will be difficult. All right, let's get back out to Vassilios Ikounakis, the head of FX strategy at Bank Lombard ODA. Still early stages in those Brexit discussions between the EU and the UK, but I'm watching the pound very closely here. And it seems to me that the mentality is still very much buy on dip here. I mean, the pound is trading still north of 130. What is your take on where the pound goes?
Well, that's the $1 million question, isn't it? Or the £1 million question. Look, I think as far as the discussions are concerned, I think there's going to be a lot of noise. It's going to be hard negotiations. It's clear that Boris Johnson is working along two dimensions. First of all, he doesn't want to realign with the EU regulation, which represents a big hurdle for the European Union. At the same time, he doesn't seem to be willing to request an extension, which means that the time is really short to come up with a trade deal that really covers essential parts of the economy. I think, last week Sterling got a bit of a reprieve on some expectations that we may get some sort of a bigger fiscal stimulus by the UK government. We'll see about that. It's still early days. I think for now, for the near term, it does provide some sort of a temporary floor for sterling between 130 and 129 or thereabouts. But I'd be very surprised if in the near term we were actually able to break the 132, 133 highs on a closing basis that we saw back in December. And that's largely because the no-deal Brexit premium is still priced into sterling and into a number of UK assets. And I think it will remain pretty much for most of the year. At the end of the year, we may get some sort of a compromise. We may get a limited deal, and the sterling may get some reprieve, also because the dollar may actually weaken as we expect towards the end of the year. But I think for now, the room for movements in sterling is quite limited.
Yeah, I mean, over the last couple of weeks, the pound versus the dollar has certainly been quite range-bound, but it tells a different story if you look at it versus the euro. The theme for the euro the last couple of weeks has been weakness, whether it's versus sterling or whether versus it's versus the U.S. dollar. What is going on there? Because we thought that the data was beginning to stabilize towards the end of the year. Why are investors turning on the euro now?
That's a very fair question, and indeed, ourselves have been surprised by the moves in the euro. I think it's largely a euro story. What we've had is that over the past couple of weeks or so, we had some really bad data referring to Q4 of last year, but they do indicate that the Eurozone and the German economy entered 2020 with less momentum than initially anticipated. Then on top of that, you add the concerns about the coronavirus, the impact on the Chinese economy, and then the impact of Eurozone and Germany, more specifically exports into the Asian and Chinese country. And at the same time, you've got some sort of a political risk premium being priced in because of the developments that are happening in Germany. And I think the fourth one, which seems to be a bit more obvious, and admittedly, I think we've underestimated its impact, is the carry. Because again, as I said before, if you look at currencies, what they've done over the past 2 to 3 weeks or thereabouts, you've seen high carry currencies performing well, and the low zero yielding currencies or negative yielding currencies actually underperforming. And I think euro is bearing the brunt of this confluence of things.
Becoming a funding currency then for other currencies. A very good point there. All right, thank you very much, Vasilis. We'll leave it there. Vasilis Gikonakis, the head of FX strategy from Bank Lombard Odier. And also coming up on Street Signs, regulate us. That is the message from Facebook boss Mark Zuckerberg. Find out why he thinks big tech needs bigger oversight in just a few moments.
Imagine carving your way through the fresh snow falling right now in the French resort of Val d'Isère. Fly to Geneva and head to the slopes from only $29.99. Book now with EasyJet. One way per person, limited availability. See easyjet.com.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Otto Sergey now checks for better energy deals so you don't have to. Meaning we can all sit back and relax. Can't we, Sergey? Sergey?
Hey? What?
Tell the people that we can sit back and relax.
Oh, we can sit back and relax.
Oh, don't waste energy worrying about energy. Automate it with Otto Sergey. Compare the market. Keep life simple.
Customer preferences determine alerts based on tariff type, payment type, supplier rating, and minimum annual saving of £50.
Can I have chemo at home?
It's only suitable for a couple of types of cancer.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Discover more tech, comfort and style for less. Upscale your drive at this year's Nissan Red Tag event with an additional £500 deposit contribution at 4.99% APR representative, available when you buy a new Nissan Micra N-Tech, Qashqai N-Tech or the 100% electric Nissan Leaf. Offer valid until March 31st. Offer valid on 4.99% APR representative. PCP product participating dealers only. Private retail customers only. Nissan finance subject to status 18+. Excludes CI and NI. For full T's and C's visit nissan.co.uk/redtag. Nissan. Innovation that excites. Make sure you don't miss out by visiting Ancaster.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Major League Baseball is back. Are you ready to unlock the 2020 season with TuneIn Premium?
And this one is gone! It hits the foul pole!
Be there from day one with every single game of spring training, rivalry games, split squads, Cactus League, Grapefruit League. TuneIn Premium has it all. Then, when the pitch count starts for real, experience live and on-demand access to every game, everywhere you go, from opening day to the World Series. Don't miss out on the action. Search Premium to upgrade today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Couple of weeks. The pound trades slightly softer today as well, but still above that 130 mark. 130.40 is where we're at. Slightly weaker, almost of trading around the flat line though. And then dollar yen, a lot of scrutiny on that currency pair, given the very weak GDP prints we had out of Japan for the fourth quarter, coming in much lower than expectations, annualizing a decline north of 6%, and yet not a lot of move in dollar yen. You can see just shy of 110, 109.80 is where we are at. But some very, very big news out of the Middle East this morning. Dubai World is set to return to state ownership after its parent company announced it has offered to acquire the 19% of its shares listed on Nasdaq Dubai. DP World Group CFO said the delisting would help the company focus on its medium and long-term strategies. Dan Murphy has more from Dubai, has been following this story. A bit of a surprise, this story, Dan. Break it down for us. What is the rationale?
Absolutely, Joanna. This is very interesting, isn't it? And certainly the optics for Nasdaq Dubai not looking very good at this point. DP World moving to become a private company, delisting from Nasdaq Dubai. Of course, this is a business that has been public since November of 2007. And when DP World first went public, it was actually one of the largest listings to ever take place in the Middle East, one of the biggest IPOs. But quite a significant fall from grace here, at least from an equity market perspective, because the stock has been down around 50% since January of 2018. And this plays to a bigger problem here in the UAE and in this capital market. In particular, a lack of liquidity means that DP World is one of the only stocks that moves on any given trading day here on the Nasdaq Dubai exchange. And that's quite significant. There's only a handful of stocks that are actually listed here. So this is quite a significant challenge. And the company has said that, look, the disadvantages of maintaining a public listing outweigh the benefits now. It says the strategy is really not being appreciated by the equity markets here. and consequently not being reflected in the share price performance. So what we're going to see here is the entity that's controlled by the Dubai government moving to pick up that remaining 20% stake in DP World that's currently listed here on Nasdaq Dubai. They're going to pay $16.75 a share. That represents about a 30% premium to DP World's closing price on Sunday, which was around $13. And if you look at the pop that we've seen in the stock off the back of this news, DP World moving limit up around 10% on Nasdaq Dubai today. Certainly, its days as a publicly listed company, though, now looking numbered. Jemana, back over to you.
It's certainly not the first time Dubai World has been in the news. And I remember back in, end of 2009, when the company came under a lot of pressure for its financials. In the end, that led to a bailout by the UAE. But Dan, I want to ask you whether what's happened today, the announcement today, could be a reflection of more broad macro developments in the UAE and specifically in Dubai. You mentioned the stock price is down 50% since 2018. Could that also just be a reflection of the lack of transactional activities that are going on, some of the headwinds facing the property sector and the shipping sectors in Dubai right now?
Absolutely. I think they're two really good points, Jemana. With regards to the overall state of the sector and the industry today, the company has also said that part of its reason for delisting is because of the fundamentals in the sector. So clearly they do see some headwinds moving forward. Despite that, though, they have worked to reassure investors today about the health of the company, saying that the financials are all in order. But to a broader point, you're exactly right. Domestic capital market liquidity is a major issue here in the UAE. It's a significant issue right around the region, including other major markets like in Saudi Arabia, for example, particularly if you're an investor looking to make an exit. The reality is limited transactional activity in this market, in particular, Nasdaq Dubai has been a major headwind when it comes to attracting new listings and new investment into the country. And at the same time, the UAE being a relatively small country, also suffering from resource duplication in a number of areas. And that means that we don't just have Nasdaq Dubai here, we also have the Dubai financial market. And it means that there is a number of large equity markets really competing for a very small pool of companies and a very, very small pool of domestic investors as well. So that's resulting in a lack of liquidity. And as a result, nothing really moves on the exchange unless you have outside news announcements like what we've seen today from DP World. So it's a bigger issue that policymakers are really still trying to address.
Really interesting points there, Dan. Thank you very much for breaking it down for us. Big news out of Dubai this morning. All right, Facebook CEO Mark Zuckerberg has called for new rules on big tech to ensure they, quote, serve society. The social media giant is set to release a white paper later today, which will lay out questions that regulation might address. Zuckerberg is also in Brussels, where he will meet with the EU's Internal Market Commissioner and Competition Commissioner, Margaret Vestager, later today. Sylvia joins me now. Facebook have done a bit of an about-face. I remember it was almost 2 years ago when Zuckerberg was dragged to Brussels and he had that face that testimony, but not much came out of it at the time. And now he's going there willingly and saying, look, I'm willing to have a discussion about regulation. So why do you think there's been this turnabout in face from Facebook?
Actually, I was going to share a quick detail about the share price over the last 2 years, because since the EU actually announced the GDPR rules in May of 2018, when you look at the share performance of Facebook, it's actually up by more than 20%. And so that tells us the story a little bit. And he will be meeting with three of the EU's top officials later today in Brussels. He has been making several remarks about the need for further clarity from regulators, as well as the need for further regulation. And so he repeated those calls over the weekend at the Munich Security Conference. Let's take a look at Mark Zuckerberg over the weekend.
We do see different regulatory models coming out of places like China that are spreading to other places as well. This is one of the reasons why I think the regulation is so important, because also regulatory models are spreading that I think encode more authoritarian values in more places around the world. I'm very worried about that. I think that we need to make sure that the internet can continue to be a place where everyone can share their views openly, and where the legal framework around this is one that encodes democratic values and open values. And I do think that it is, as part of that, we got to move forward on regulation. Hopefully we move forward quickly before a more authoritarian model gets adopted in a lot of places first.
So Mark Zuckerberg there, he will be meeting Margrethe Vestager, the head of the competition policy in the EU. And when it comes to the European context, we are expecting the European Commission to unveil on Wednesday new regulation on AI. We know that Facebook and other big tech companies have big investments in this area. So that perhaps is one of the points that Vestager will address with Mark Zuckerberg later today. But one thing is for sure, tomorrow morning we'll be bringing you an exclusive interview with Margrethe Vestager, the head of competition policy in the EU.
And you're doing that yourself, right? So
Correct.
off to Brussels this afternoon. Excellent.
In a few hours.
Looking forward to that then. All right, let's bring in Seth Wallace-Jones, the principal analyst from Omdia. Do you see scope for a meaningful breakthrough here between the EU, the tech people, the tech titans, the tech regulators, and Facebook?
Well, I think one of the fundamental changes that's happened in the last couple of years is obviously there was the fine just last year for $5 billion, by the FTC. I think that really focused Facebook somewhat, and Mark Zuckerberg has changed his tune somewhat since then, because he's really been talking about defining what the regulations are so that there's a lot more clarity there. He's also been looking at sort of 4 different areas. So he's been talking about things like election integrity and several other aspects which he's trying to avoid, I think, looking at the competition and the taxation aspects, which probably the more expensive and sort of game-changing regulations that he wants to avoid coming up.
It's easy for them to play ball on the regulation side of things, as long as they're part of the conversation. But you mentioned the FTC fine. I want to go back to that, actually, because there are 2 things going on here. There's the fine the settlement that they paid last year, $5 billion. And at the time, I remember many people out there were saying, look, this is just a slap on the wrist for Facebook. Their revenues are more north of $80 billion a year. $5 billion is a drop in the ocean for them.
It's less than one quarter's profits.
Yes, but you seem to think that actually for them that was a turning point in the way they're thinking about dealing with the regulators going forward.
It's maybe a realisation that the regulators do have some teeth and that they can actually apply them. That was obviously just in the US. They're also facing similar investigations in the EU and by national states as well across the world for the same case. And that's all coming back to the Cambridge Analytica scandal and the data protection and privacy issues that are arising from